Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the broader markets in the face of the coronavirus fears, and today was the most extreme day that we've had so far, down 4.5% on the S&P 500 into the close. It was an all-out free fall, probably one of the highest dollar volume days on SPY. We've seen higher volume days in the past, but not while we're trading up over 300. So dollar volume is massive. It's a race to the exit. We are going to see capitulation mark the bottom. What I want to see to mark the bottom at this point is an all-out flush during regular trading hours where you're sitting there saying, oh my God, the market's not going to exist tomorrow. And then we V-shape bounce. We drop 2%, V-shape bounce 2%, all within a short span with huge volume. That's what we call capitulation. So that's something to be keeping an eye out for. The hourly time frame has been a great guide for us. Before we get into the technical analysis, a couple things to note. Number one, anytime we see headlines in the US with more and more cases, it's going to have a bearish reaction. We were in a bullish market environment, and every time Trump said something about the China trade deal, the market would go up. That headline was just a regurgitated headline. It's now the opposite. Any new headline with increased cases, 8,000 people under watch in California, anything like that is just going to favor bears. There is overnight headline risk, which is why you don't see anybody holding bullish positions overnight as far as, the big boys and what real volume is doing. It's all a race to the exit, and week closes 3 days in a row because no one wants to hold overnight in the face of these potential negative headlines. Another note, prepare yourself. I'm not a fearmonger. I was a week ago shaking my head and saying this is no big deal. I changed my tune a little bit as soon as I started seeing some economic numbers. And just prepare. What happens if supply chains are disrupted? I'm not worried about dying from coronavirus. I'm worried about major supply chains disrupting grocery stores, getting restocked and things like that. So just prepare, have a plan. It's better to have a plan and not need it than to need a plan and not have it. So stock up a month worth of food with stuff that you'll eat anyways. And if it all blows over, you got a lot of food that you can eat. No harm done. Be protective. The biggest mistake that traders are going to do here is try and enter and then not take a small loss. I would rather take 5 small losses being incorrect about this being the bottom and then eventually being right about the bottom versus not taking a small loss and next thing I know I'm down 5% in a position. Again, it all depends on time frame. If I'm looking 5 years out from now, maybe I'm starting to scale in a little bit. Scaling is the key word. I'm not just going to say, all right, I'm buying my position now and using up my cash. I'm going to say, I'm going to break up my cash into 5 positions. Maybe I buy 1 position today, 1 position tomorrow, 1 position on Monday, and just slowly scale in. Otherwise, for me personally, cash is king in scenarios like this to allow for sleep, number one, and to try and approach each day with a fresh, clean slate. So I exited SPXS yesterday too early, obviously in hindsight, but honestly looking back on things, I don't think I would have changed a whole lot about that. I'm still trading both SPXS and SPXL. Those are the only 2 instruments I've traded in the last 3 days. I'm keeping it very simple. There's certainly plenty of volatility in those 2 names where I don't have to be looking at anything else. And I am going to be day trading only until we have an hourly trend change. I'm not going to swing any bearish positions at these levels. I'm not going to swing any bullish positions at these levels unless we change the hourly trend. So today, I was not here during the morning. I did take 1 major trade, 2 trades. I wasn't here during the morning. I got back to the computer. I saw this bounce. I got back probably right around here and said, all right, that's a solid bounce. We're looking for a 5-minute higher low as a result of this bounce. So I zoomed into the 2-minute time frame to look for details because I know the most likely scenario is a 5-minute higher low, and I want to look to try and get that 5-minute higher low. So I made an initial entry right here, just above 304, and I said, okay, if the 2-minute RSI gets oversold, I will make my second entry, and at that point, the play will be off the low of the day. I wouldn't want to stop out at the low of the day because it would be a pretty sizable loss. That's a good 1% to the downside. I guess by the time my second order would have filled, it would have been a bit less than 1% risk, but a bit more risk than I would have liked to ideally have had. But that would have been my level that I would have used if I had entered a second order. Ended up only getting my one order filled. As soon as this bounce started getting going, I canceled my second order or I just disregarded. I have no interest in a second order anymore. And I moved my stop to 303.65. At that point, my risk goes from a potential 1% to way smaller than that. And I know that if this is not our 5-minute high or low, and if I were to have gotten stopped out of that position, bulls would have been in a lot of trouble because just like that, we would have been looking back at the low of the day. It worked out. We bounced more than 1%. So I was holding that position. And I said to myself, okay, what's the most likely scenario? Well, we know the hourly time frame has to change the trend for the bulls to prove anything to us. Just like yesterday, the morning bounce gave it all back. Morning bounce gave it all back. So I knew hourly consolidation and a higher low and higher high would have to form. So the most likely scenario is midday hourly consolidation. I don't want to sit through hourly consolidation and just watch my short-term gains evaporate. So I said to myself, okay, hourly consolidation is likely. I zoom into the 5-minute time frame and look for details that is the most likely scenario. In general, a loss of the 5-minute uptrend indicates hourly consolidation is underway. I then saw a head and shoulders pattern forming. I had two options. I could, number one, just exit when the 5-minute higher lows are lost, which would have been down here at 307.35. I took the conservative route. I exited before we even lost support. I said, this looks like a head and shoulder. I'm exiting on this right shoulder. So I sold on this bounce. We then dropped down, and I was very pleased that I took that profit. I then tried to scale in for an hourly higher low. So what does that look like? I just made a good bit of profit, and I'm going to re-enter that exact same position. I made an initial entry. Again, I was using shorter term time frames for some details. I made an initial entry right here at about 306. And then we saw a big flush down. And I entered a second position to have the same size position that I had on the original trade here on the 2-minute higher low. So at that point, my average was maybe mid 305s. And I put my stop under 303.69 and I left the computer. Because at that point, if this was not our hourly higher low, the bulls are in trouble. And I know that the hourly trend change for the bulls is a lot less likely if that level breaks. So it broke, I was stopped out. So in the end, I ended up making maybe $5 on the way up, lost maybe $3 on the way back down, a little bit less than that, but ended up with profit on the day. But that's how I let the winner ride and cut that loser short before it gives back all my gains. So the criteria for any bullish swings, again, if-then scenarios. If we are in an hourly downtrend, then I am not swinging any positions bullish. So we have no proof from these bulls in an hourly trend change. The setup was there each morning. If we bounce in the morning, we need midday higher low, end of the day, new high of the day, and hourly trend change. Obviously, we have not seen that yet. So now we have to go to historical RSI levels. Look at the daily RSI for SPY. It's at 20.3. We look back to our comparable December 2018 dump, and the RSI got down on the daily time frame to just under 19. So it's not as extreme a daily RSI as it was back then. We have not dropped as significant a percentage as we did back then. The difference is that percentage drop, and I'm looking at 280 to 234. It was a bigger percentage drop. It was, don't fail me now, measuring tool, 17%, let's say, very roughly. And at this point, we've dropped down maybe 13%. The difference is this was longer term. It took a couple weeks. This is a lot faster with more volume. So it's a lot scarier. It's a bit more of a free fall. Check out the video on our YouTube channel, Dan's Plan If It Hits the Fan. I assume a lot of you have watched it because it has a lot of views in terms of our normal technical analysis videos. But I go over 3 scenarios of when it hits the fan. The first is comparing to December 2018 and what I look to do. The second is comparing to 2008. And the third is comparing to complete collapse prepper mode. So check out that video for some insight to establishing game plans. Again, people with cash right now are starting to salivate a little bit because historically we know bounces have been very significant. Again, we're being very cautious. I will continue to put myself in situations trying for bounces and risking small risk where if I get the bottom right, then I have a big win. And if I'm wrong, it's a small loss. And I did the exact same thing when I entered SPXS up here. Part of the SPXS position I had was in our company account. And I said to my partner, Jason, I'm in heavy SPXS right now. I will exit if we break the high of the day on Thursday. And I'll keep that risk small. But basically the setup was, if this is it, it's going to be a big win. And if it's not it, it's going to be a small loss. That's what trading is in a nutshell. It sounds really simple, but setting yourself up for big wins or small losses in two different scenarios. So I will obviously be interested in playing a bounce tomorrow if we see a gap down open. There were plenty of gains to be had in both directions today. So we have to eliminate any bias. We can't sit here and say, we're going to bounce today. We can say, I think we're going to bounce today, but I need to protect that position in case I'm wrong, because a lot of people right now entered on this bounce and they were up a solid 1 to 2% and they were feeling good this morning and they didn't have a stop loss, they didn't take profit, and right now they are in the red on that position just as much as they were up earlier today. So remain protective, have a game plan established. If you want to start scaling in, that's perfectly fine as long as you have a game plan. Will you exit at a certain level? That's what needs to be determined. The most important support level for me now is the monthly high or low. 284.82 on SPY, and with dividends and stuff, that's a factor on SPY. So looking at SPX, most important level for me, 28.22, 28.55, those little levels right there. It's a monthly uptrend as long as those hold. If we lose them, then we're going to say, okay, this is definitely getting very significant. And it's going to start reminding us of 2008 at that point, just in terms of magnitude of the drop. Because our other examples, end of December 2018, and previous examples between now and 2008, haven't gotten much more extreme than this. So if we drop another 5% over the next 2 days, then we're going to start saying, uh-oh. So, I got the sun right in my eyes. So we know on any bounce tomorrow, anything under 30, well, we're on SPX, let's go back to SPY. So on any bounce tomorrow, we know anything under the high of today of 306.94 is just, or 309, what is it? 309.65 is the high. So we know anything under that is just an hourly lower high. So that means we can bounce over 3% from where we stand right now and still just look for an hourly lower high. Again, that is our anti-FOMO. We got to a point this morning, we had bounced a certain amount and we said, okay, no more bullish entries. If you want a bullish entry and you're feeling FOMO on this bounce, you're entering on an hourly high or low. That's the only play at this point. Do not chase a bounce that has not changed the hourly trend. That's your anti-FOMO pill. IWM, free fall, close at the low 3 days in a row. 144.93 is the next support level. And again, at this point, we're just looking at all monthly supports. 144.25 is the most important monthly support for IWM. QQQ, where is our monthly high or low? Plenty of space. So we could pull back at this point. 180, 182 is that level. We can drop 10% from today and still be in a monthly uptrend. So the tech sector bulls have that in their favor. Again, hourly lower highs for every individual name. A couple days ago, I said the time frames I care about are our weekly, can't escape it, our weekly or our hourly. Those were the two trends, hourly downtrend, weekly support levels. The weekly support levels have been taken out. So we've got our hourly downtrend and our monthly uptrend are now the most important levels for me. So monthly support and hourly resistances. XLF, monthly support, still a good ways above it. That's down at 25.92. Hourly downtrend, anything under 28. Where are we? Anything under 28.39 is just an hourly lower high. XLV, closing at the low. And again, you go back and look at December 2018 levels, compare what the RSI was, compare the size of the pullback. At this point, XLV, plenty of space for a monthly high or low, 87.20. Hourly lower high of resistance is our guide. Biotech sector, 88.05 broke. We zoom out to the monthly. Plenty of space to form a higher low. Anything above 72.97. Hourly lower high is our guide. SMH, significant pullback. Semiconductors have been getting crushed. But we are easily in a monthly uptrend. Anything above 107.41, we can pull back 25%, a little bit less, 20%, and still be in an uptrend. Hourly lower high resistance. The VIX is in big time breakout mode. Look at December and look at where we are now. The VIX is well above those levels. 50.30 from February 2018 is the only level that we've seen in this range nearby. So let's go back at SPY. Let's look at what was happening at SPY at that point in time. And it wasn't anywhere near what we're seeing now. It was speed on that pullback. It was a 2-week dump of 11-12%. So that's why the VIX spiked that significantly. Short squeeze and a whole bunch. I believe that's when we saw, what was the instrument that broke? VXX, not VXX. UVX, no. One of the volatility instruments broke, and I think that's when it happened. But bottom line is, we're reaching extremes. You're seeing the market right now. I mean, you look at the coronavirus names, APT, and all these other names that are breaking out. You're just seeing pure human emotion on these charts with massive fear and massive hype and FOMO. Let's look at this chart, APT. I mean, this is just reaching absurd levels. And again, people are blowing up their accounts by trying to short this momentum. Logic is out the window. You can't say, well, APT's balance sheet has its market cap at this value. That means nothing in this kind of market environment. So just be aware that trying to play against momentum is obviously very high risk when things are this extreme. Hourly higher low for the VIX to keep the bulls in full control. Anything above the low of today, bulls have plenty of space to work with. Gold. So gold is at risk of losing the daily uptrend. If from here we drop down and break 1625, I would consider that a daily lower high and lower low. From there, we look for weekly consolidation. I'm using the weekly uptrend as my guide on my long-term GLD position. So not at risk of exiting that position in the near term, but just noting, obviously, gold is not exploding. We're not seeing all market money head to gold. We're seeing all market money, not all of it, but a lot going to cash. So it's going to be interesting to see how gold plays out from here. Miners collapsed. Silver, extremely weak as well. Again, I'll pull up the chart again, but you know what it looks like at this point. XAU, XAG continues its breakout. All gold, no silver in terms of the past few days. Look at the miners. This is fear. This is why I chose GLD in my long-term position to only trade based off gold. I don't want to deal with miners and their impact of the market on miners. The miners dumped today because we had maximum fear in the market overall, and these miners are traded on the markets. They are susceptible to some of that fear and correlation. 28.93 support is approaching, but obviously this is a huge setback for the miners. Will they bounce? Yes, absolutely. But we're not even 4-hour oversold. Let's turn extended hours on. We're just getting to 4-hour oversold. So again, can always go lower. You have to remind yourself that if you're shorting, it can always go higher. And if you are going long, it can always go lower. Oil in free fall. So we knew once we broke support of 50.55, we had a lack of support nearby. We dumped. We bounced to a weekly bear flag, and now we have another leg down, and we're looking at 42.40, which is the lowest price that oil has seen in years, and that's potentially in play now. And oil and the market will likely bounce at the same time on the same day, but there's no sign of it right now. Natural gas is dumping as well, lower lows, and we're reaching areas that we have not seen in a very long time on natural gas. We're looking down at 1745, 1579 is the next level. Pretty much 1574. Again, many year lows, decade lows on natural gas. So there's fear everywhere. And we did see that in 2008. Again, I highly suggest everybody, when you have a few hours to go back to what happened in 2008. I went back, I spent maybe 5 hours and said, what happened in 2008 to gold, to miners, to utility sector, to the tech sector? And I wanted to know, and what I learned pretty much is money did not feel safe anywhere. And we're going to be watching to see, is this December 2008, which is an opportunity, or is this going to be significantly worse and more in line with 2008? That's what we're looking for at this point. And again, as I said in a recent video, the most significant scenario that can cause fear from here would be the bounce to result in a daily bear flag and then fresh new high bear volume lows, because we are so used to V-shaped bounces over the last decade. Cash is a great position. You don't have to be in positions every day. You can be patiently biding your time. Today I traded with smaller positions, and I knew I was distracted. I had a Comcast guy coming out. I had an appointment, so I traded way less. I took those 2 trades that I highlighted, and I wasn't sitting here trying to mash buttons. That's because I'm in conservative mode. I am trying to hit a goal of capital gains for 2020, and I'm well on my way towards that. So there's no reason for me to spike my risk to reward scenarios by using more capital. If you want to be really aggressive and you're saying, I'm using this opportunity to try and change my life, then yeah, you're going real aggressive. But that's not where I'm at. Everybody has a different financial situation. Everybody's portfolio should be looking different based on that financial situation, and everybody's game plan for this kind of scenario should be different based on what that financial big picture looks like. What are your assets? What are your liabilities? Do you have a mortgage? Do you have a family? All of that determines how to approach things. It's a long video. Big picture, these are numbers on a flashing screen. Yes, they have big real world implications, but I always find it insane when this is going on and I'm out in the real world going about my day and everything's the same. Nobody knows anything's going on. It's all the same. It's like it's not happening, which is always very interesting to me, because for those of us in the financial world, it's such a big deal. For those outside the financial world, it's whatever. So we'll see. 2018 or 2008, that's the question from here. And we'll see how we head into the weekend. Again, who's going to want to hold long over the weekend with the potential of seeing increased cases numbers in the US? That's the mindset that we have out there. One more trading day to go before the weekend. Thanks for bearing with me. Thanks for watching. And we'll see you soon. Stay protective. Use stop losses on every single trade. Don't stress. Deep breaths, meditation, nature, all the good stuff. So this is a greenhouse my buddy helped put up. Nice little 20-footer overlooking the second little pond. And I'll start some stuff in here. And eventually I'll move these tables out and just grow tomatoes in pots. I always have trouble with tomatoes in North Carolina due to blight, which is a fungus that splashes up on the leaves from the soil. So when they're in pots, they're elevated above the soil and much more protected. I did the pots last year on the deck, and they turned out really well. So I think I'll stick 8 in here in big pots, and I can trellis them from these wires up here, and I'll put peppers in little pots in front of them. And the tomatoes and nightshades like it nice and hot. I've got this little thermometer that tracks to my phone and gives me all these charts as far as fluctuations of temperature and relative humidity. So looking forward to playing around with this space. Probably grow some greens in here in the winter as well. Did a little bit of weeding, the onions and garlic, still a little bit more to go, but you can see all the elephant garlic poking up and the smaller garlic as well. It's spring. Looking forward to plugging all these holes on the edges of these beds. I can put a whole bunch of pollinator flowers here, or even just vegetables. My goal is to have as many living things on the property as possible, so I'm going to grow twice as much as I need of everything and just throw random tomato plants around and other things for the animals to enjoy, as long as they leave my half alone. A little more prepping with a whole bunch of dried beans and lentils and rice. Can't be too careful.